This video is sponsored by Project to Payment. More on them in a minute. If you Google what cleaning business profit margins should be, to date, this is the answer you'll see, 10 to 28%. Obviously, that's a big range, but is it even close to the right answer? What should you be shooting for in your cleaning business, especially in the early days? And what profit margin should you set as a long-term goal to make sure you're up there with the most profitable cleaning businesses? And maybe most importantly, how do you make sure your cleaning business reaches that goal as quickly as possible? That's what we're breaking down in this video. So let's get to it. So first, a quick breakdown of what profit margins are. The basic definition is the difference between your gross sales and the expenses associated with running your business, expressed as a percentage. Obviously, your tax deductions can play a role. If your business owns equipment, then maybe you factor in depreciation. And there are lots of other things you could consider. But for the sake of this video, we're keeping it simple. So just to use round numbers and show you what this looks like, if your gross sales are $100,000 a year and it costs you $50,000 a year to be in business, you then run a 50% profit margin. The reason this is an important topic is because many will say their business does $200,000 in gross sales or $1 million in gross sales or whatever the number. And these numbers may sound impressive, but they don't tell you the whole story of the health of the business. And they certainly don't tell you how the owner of the business is doing financially. It's for this reason I have never set goals based on gross sales alone, but always by focusing on my profit margin, since that's what helps me determine my take-home pay as the business owner. My mission as a business owner is simple: make as much money as I can with as little time and effort as possible. And that doesn't always mean building a huge business. So what are some good profit margins for cleaning businesses? To answer that, we need to break it down by the two most common cleaning business models, since there are different factors in each one to consider. And let's start with a one-person cleaning business. Obviously, rates vary from market to market, but I'm going to use the hourly rate of $75. You don't always tell your clients your hourly rate, but you use that number to calculate your bids. When I was cleaning luxury residential, on average I billed 32 hours a week because I chose to work part-time. This gave me a balanced schedule, and since my rates were at the top of my market, that's what I needed to reach my income goals at the time. So 32 hours a week times $75 an hour equals $2,400 a week. When I was a solo cleaning business, I would always figure on working 48 weeks a year. This would allow for my vacations, time missed from being sick, and so on. So $2,400 a week times 48 weeks equals just over $115,000 a year. And that represents gross sales. Now we have to factor in expenses. And I'm going to go through these kind of quickly and start with the easy ones. And remember, your amounts won't match these exactly. This is just an exercise to show you how to calculate your profit margin. General liability insurance, $65 a month or $780 a year. Accounting software, $30 a month or $360 a year. Invoicing and customer management software, $20 a month or $240 a year. Bank account fee, $15 a month or $180 a year. Business cards, let's say $50 a year. If you have a website, let's say $20 a month or $240 a year. I've always had a P.O. box for my cleaning business, so that's another $260 a year. Annual LLC renewal and accounting fees around $500 a year. Because I would have a car whether I had a cleaning business or not, I'm not factoring that in here. But you may be able to deduct mileage on your taxes, so research that or ask your accountant. I will add some extra fuel and maintenance costs, since if I was driving to a 9-to-5 job every day, I would definitely be using my vehicle less. So let's call that an extra $50 a week or $2,600 a year. I've never had branded uniforms in my cleaning business, but I've always bought clothes and running shoes just for my cleaning work. So let's call that $300 a quarter or $1,200 a year. Next is supplies. I can't go too deep into this topic here, but I have always trained my clients to provide the bulk of the cleaning supplies. That saved me from dragging a huge cleaning kit from job to job. And in residential, a homeowner will usually maintain cleaning supplies anyways, including their own vacuum. So I gave them a list of recommended products and they kept those things on hand for me. And I still do this with commercial accounts today. What I did take from client to client though was a cleaning bag with some essential tools. Cleaning towels, mop heads, squeegee, and so on. Check out my Amazon store linked below for the whole list. But cleaning towels wear out, tools break, gloves get thrown away, so let's call that $500 a year. And if you do provide every little thing for every job, that's okay. Just factor in those costs. Next up are credit card fees, if you let clients pay that way. If you do, then on average, you should expect to pay about 3% of each transaction. But maybe not all your clients pay with a credit card. Maybe some write you a check or pay with cash. So for this example, let's say $70,000 of those sales are by credit card. That would mean your fees would be about $2,100. Now, if you add all that up, what are our expenses? Annually, that totals just over $9,000. So our annual gross sales are this. Our annual expenses are this. So divide the expenses by the sales and you get 0.078, or just about 8%, meaning your expenses are about 8% of your profit, giving you a profit margin of about 92%. Now, before you leave a nasty comment saying I missed two important things, let me tell you what those two important things are. Number one, as a business owner, you are still responsible for paying taxes. When you have an employer, they typically withhold taxes on your behalf. But once you're self-employed, that's on you. So I highly encourage you to hire a trusted accountant to give you guidance on this. But in this example, 92% would be your gross profit margin. Once you take out taxes, then it becomes your net profit margin. If you saved 30% of your gross income for taxes, that would equal about $35,000. Leaving you with a net profit margin of 62%. And number two, the profit margin in this example is so high because you are the one doing the cleaning as the solo cleaning business owner, meaning you are not paying labor costs. But some might prefer to factor that in using what's called the market rate labor cost. In other words, if you were to hire out the actual labor, what would it cost you? Well, if we went with $35 an hour, then our numbers would look like this. $35 an hour times 32 hours a week times those same 48 weeks a year equals just under $54,000 a year. So our annual gross sales minus our annual expenses from earlier, minus those labor costs, even though you're the one doing the cleaning, run the numbers again, and we get 0.544, or about 55% expenses, revealing a gross profit margin of 45%. And in my opinion, that's a very healthy cleaning business. So as you can see, there are a variety of ways you could look at this and run the numbers. The purpose of this video is to not say which is best or define different terms. It's to get you looking at the complete financial picture of your cleaning business to make sure you're on the right track. Remember, there is far more to a business's financial health than just its gross sales. And one more thing is that your first year in business, your margins might be lower, and that's okay. This is due to all the initial costs of starting, like getting your LLC, logo design, supplies, and so forth. Well, before we talk about the next cleaning business model, let me tell you about the sponsor of this video, Project to Payment. As you can tell, I care a lot about finding solutions for my business that will keep my expenses low and my profit margins high. And that's why Project to Payment is my favorite tool for all things invoicing. I love it because its simple design makes getting paid by your clients a breeze. And the reporting dashboard gives you real-time data on your gross sales and any credit card fees. In addition to all the great invoicing and payment features, you also get an easy way to manage your customers, send estimates, receive project requests, and so much more. The team over there loves supporting small businesses, which is why they set their cost at just $20 a month for as many users as you need. And if you use my special link in the description below to sign up, you get 3 months free. So be sure to check them out. Your profit margins will thank you. So cleaning business model number 2 is where you decide to hire out some or all of the cleaning. And there's nothing wrong with being a solo cleaning business owner. I did that for many years and I was very happy. But when you hire out the cleaning, you stop trading all of your time for money, which allows you to grow your business. So to keep this simple, I'm going to go with a lot of the same numbers from our last example as far as the expenses are concerned. Feel free to pause the video if you need more time. But many of these expenses don't actually go up just because your business grows. In fact, many of them stay the same or some could even go down. What obviously will go up are your gross sales, your labor costs, and your credit card fees, if you accept those. Most of my commercial clients pay by check, but I will still factor some credit card fees in to give you an idea. And of course, you'll have taxes to factor in, but again, talk to your accountant about that, because this next example is based on gross profit margins. So for this one, let's say your gross sales are $250,000 a year. If half of those sales are by credit card, then this much is going to card fees. And then we have labor costs. What you pay will depend on the market, but earlier I used the example of $35 per hour for every billable hour at $75. That comes out to about a 47% labor cost. So 47% of $250,000 equals this. So our annual gross sales minus our base annual expenses from earlier, minus our increased credit card fees, minus our labor costs. Run the numbers and we get 0.512, or 51% expenses, revealing a gross profit margin of 49%. In my opinion, that's a very healthy cleaning business. And the cool thing about this model is that as you grow more, typically your margins increase. Just be sure to run the numbers and see what the sweet spot is for your financial goals as the business owner. So what should your cleaning business profit margin be? Back in the intro, I showed you Google's answer to that question, and it was anywhere between 10 and 28%. But as you've learned in this video, I believe yours can be much better. The goal I set for my coaching students is at least 30%, but ideally 40% or higher. To reiterate, more than anything, this video was about getting you thinking about the expenses in your business and keeping your profitability in check. Different cleaning businesses have different needs and expenses. Some also need workers' compensation, some others might need vehicles. But if you aren't tracking your expenses, then it will affect your take-home pay as the owner. And remember, you're in business to make a profit, and hopefully a very healthy one. So if you want help getting your cleaning business where you want it to be, then be sure to check out my coaching program linked below. Thank you again to Project to Payment for sponsoring this video. You'll find a link below where you can get 3 months free. And remember, I believe you can build the cleaning business of your dreams. So have confidence in yourself and know that I'll be here to help you.